And here we are, finally, on the last chapter of this journey. And of course, we could not end this session, this series of recordings and texts about trading without money management. Now there are a lot of money management techniques out there on the market, so feel free to go on Google and just type money management in trading, and you will see a lot, and I mean a lot of options. I do believe they are all crap. Yes, that's right. I believe that there is no predefined set of rules to keep you out or to keep you safe on the markets. They all have flaws. What a real money management theory or strategy should be is the money management that suits you. Some traders don't use stops. They use a mental stop loss, it is being called. I mean, they know that if the price goes below that level, they are wrong. So when they see that they are wrong, so that price is being overcome, they know that they are wrong, then they reassess. They start hedging, for example, or they start covering, they start cutting the losses. So cutting the loss is one of the difficult things to do when you are wrong. And actually admitting that you are wrong, like in life, okay, you are admitting that something is wrong. So admitting that you are wrong, it is extremely tricky and difficult, not necessarily for the fact in itself, but for your ego. So human nature, for traders like in any other job, plays a very tricky role in here. Other traders, for example, there is a famous rules of 2%, as you can see that have been written in here. They do not risk more than 2% of any time of their account. Okay, I agree with that. But let me tell you something. For example, you are on any given trade, okay, so 2% on any given trade. So for example, you are being bullish on the euro dollar, and this being in relation with risk of moves. So you are being bullish on the euro dollar, and of course, that being a risk on move, you are also being bullish on cable, on Aussie, and so on and so forth. So you do not risk more than 2% on your account on any given trade. So you are entering on the euro dollar, and you place your stop loss on 2% of your account, and then what should you do on the next trade that comes? If you want to take a second trade, what should you do? You risk a different 10% of the difference that remains in the original 2%. So this I don't know, does not appeal to my trading styles. There are traders that have no patience. Just like that, they have no patience. No patience. They don't like, and they can't wait and see for days and weeks for the price to make numerous ups and downs before the eventual take profit being hit or stop loss. So what they do, these are being called scalpers, and they go for quick targets, fast entries, fast exits, taking small profits as many times as possible. This is also being called high frequency trading if conducted by machines. Now we are people, and we are not able to do thousands of trades per minute, but we can do, for example, something like 10 or 20 trades on a day. 10 or 20 trades out of 10 to 15 to 20 pips makes 100 or 200 pips in a day, which is quite good for an intraday session. When prices normally range 65% of the time. So once again, from my experience, there is no secret formula to money management, and no rules written can help you as a trader. The human nature, like I told on the previous chapter, makes you doubt your judgment, even if you are right. When you're doing your technical analysis, take into consideration that you are looking at candles that already have closed. When you are backtesting in history, you are not putting your fundamental analysis or your news stream, or you're not looking what kind of an event caused this candle to close in this way, that candle to close in that way, and so on and so forth. So you are just analyzing the candles. Well, when you are doing real trading under live conditions, you are seeing that sometimes, let's say, sharp moves occur, and you want to know why. Before the candle actually closed, you want to know why. And then you go on the news stream and you see that, I don't know, the Pope said something, or the ECB president said another thing, or somebody else says another thing, and so on and so forth. And you become panic if the price enter the panic mode if the price goes against you, and so on and so forth. But you should keep in mind that when doing your analysis in the first place, you didn't look at those events in the sense of analyzing the fundamentals besides the technicals, but you just look at the candles. So do the same in here. Try to ignore what other people say and sticking to your opinion. Of course, knowing when you are wrong and if you are wrong, and this should help you a lot. I also do believe that in order to be successful when trading the currency markets, and actually when trading any kind of securities, you need to know yourself extremely well. You need to know you can take a hit, and you need to know you can rise from that hit and move forward. You need to know that you can be successful, and you need to temper your joy and not overtrade. You need to know when to take a break, and you need to know when to be aggressive. You need to know that on the other side of a trade is another trader that takes a loss when you are winning, and it is winning when you are taking a loss. You need to learn to be merciful, and you need to learn to let the market go. Trading it is extremely exciting. There is no day like the other. That makes it so beautiful to look upon. You don't know actually what the next day is going to come. Markets are in a continuous and permanent changing mode. What's valid today, it is not valid tomorrow. And also, I recommend to be patient. Patience always pays, and that is the best money management advice that I can give you today. Now, coming to the end, I felt great pleasure of sharing with you this, let's say, basic knowledge that I have on the currency market, and I wanted this to be a guide for introducing you to the currency trading. Now, from this till actual trading, there are a lot of different steps to do, but I think that it should be a good start for new traders. It should open your appetite for learning some more, and why not, if you have questions and feedbacks, feel free to write me. You have my email address in there. I will be gladly answering all of your questions and your feedbacks. So thank you very much. I apologize for any inconveniences and or mistakes that I've made. I hope that you will find a better way to express yourself in the markets, and if you in your trading world find something that might let's say be in contradiction with what I am saying in here, feel free to tell me. No harms and no hard feelings at all. So for the last time, stay safe on the markets and keep in touch.